One of the reasons why I'm so dedicated, and shout out to Saray Conception. I'm reading super chat. Shout out to Centennial G. I'm rocking with y'all. One of the reasons why I'm so adamant about continuously investing in real estate, paying off the mortgages, continuing to expand my empire, and so on and so forth, because I'm not competing against other buyers. I'm competing against corporate entities now. When I say that the last frontier, and I've been telling y'all this for a long time, the last frontier for success when it comes to your ability to be able to leverage what it is that you have in order to get a slice of the American pie, and then hopefully one day at some point become a millionaire, was real estate. Either you got to figure out how to add value into a company, you got to figure out how to add value from a business owner's perspective and market yourself effectively, or you can leverage assets such as real estate in order to continue to be successful. Most people that are millionaires are not millionaires as far as their earnings. They're millionaires because their assets, and their biggest asset more than likely is their home, and the value of your home minus what it is that you owe to the mortgage company shows what your net worth is and the equity that you have in that property. Let me break it down for y'all again for the people that's not good at math. I'm not good at math. The value of your home, let's say your home is worth $500,000. You owe $250,000 on it more, right? That means that the equity that you have in that home is $250,000. $500,000 minus 250 leaves you with 250. That means that contributes into your net worth. That's a contribution into your net worth of $250,000. Now, that is secure as long as you do not pull the value out of that home. When you take a home equity line of credit, when you pull money out in order to be able to go to Tulum and have a good time, you want to refinance and all of this other type of stuff, then your net worth goes down and you're not being able to substantiate how it is that you're building up a nest egg that would allow for you to be able to retire successfully, okay? So I want to play a video specifically for you guys, and I want to break this down. And shout out to everybody in the chat with a super chat. I'm absolutely positively going to read y'all super chats, and I'm going to open this up for y'all. I want to play this video really quickly, and I want to break down to you what you're really competing against silently. What you're really competing against silently. This is something that's not being advertised because the only person that they're going to show you is somebody that's looking to buy homes. They're not going to show you the corporate entities that you're truly competing against. Let's get into the show.
There are many problems in the modern housing market, but the biggest one for Americans tends to be the price.
Prices rose 40% from the start of the pandemic.
In the final quarter of 2022, the typical U.S. home sold for a record-shattering $468,000. That's unaffordable for most Americans, leaving them to rent.
The housing costs are completely out of line with wages.
Some members of Congress believe Wall Street is a part of the problem.
What's outrageous is your tax dollars are helping Wall Street buy up single-family homes. You're subsidizing Wall Street.
Massive private equity firms like Blackstone and Pradium Partners have backed a relatively new breed of homeowner, the corporation. This growing industry buys or builds single-family homes and then rents them out.
We hear from community organizers that are door knocking in certain neighborhoods.
So listen. Let me break this down from a C student's perspective for you guys, for those of you in the back that really don't get it. What they're basically telling you is that the reason, or one of the main reasons why home prices are skyrocketing, is because you're competing against people that have an ungodly amount of resources and money in order to be able to force you into being a renter instead of allowing for you to buy homes at a reasonable price. These corporate entities are also one of the reasons why inflation when it comes to housing are astronomical. Back during the pandemic when I hit a pause on buying real estate, because I don't believe in overpaying for anything. Back during the pandemic when I hit a pause on real estate, right? People were paying over $100,000, $150,000. I've even seen a situation where somebody paid over $200,000 over asking price for a property with no home inspection. No home inspection. The inventory was so low, not only because it was the perfect storm of a pandemic, people looking to make sure that they bought homes at the rate that they bought homes because it had largely been predicted that the Fed was going to raise rates in order to lower and slow inflation. But also on top of that, one of the biggest pieces of the puzzle that very few people actually paid attention to was that in order to protect themselves and to make sound investments because they can manipulate and control the market based off of the demand is one of the very few things that the federal government has no control over. Was corporate entities started making investments into real estate at a mass level, which affected you personally. And so while you were sitting there talking about George Floyd, Black Lives Matters, while you were sitting there being distracted about abortion rights and who's going to be in the Supreme Court nominee, while you was over there being distracted by what's going to happen in Ukraine or whatever, so on and so forth, as usual, the people that got their eyes on the prize and that's paying attention to what's happening in the news perspective in order to make themselves more informed on how it is that they need to move financially were making the moves to snatch the American dream right from under your feet. They were making moves to snatch the American dream from under your feet.
And are just surprised by how many of the homes on a particular block will be owned by a corporate landlord.
Industry advocates say corporate landlords play a critical role in addressing the nationwide housing crisis.
What we have in housing in the United States is a chronic shortage since the financial crisis.
And so the question really is, how do we fill that gap? Is the answer incentivizing new housing development, new housing investment, new market participation?
Nope.
What's behind the rise of corporate landlords? And how, if at all, will the government regulate them?
They can't.
As of 2023, corporate landlords only command a small portion of the rental housing in this country. The vast majority of all rental units, including apartments, are owned by individual, small-time investors.
And that won't be the case going forward because they have exponential growth and they're starting to see a market for themselves, an opportunity that is largely going to be unregulated because each state and each city operates like its own entity. Pay attention, y'all.
But there's growing focus on single-family homes.
Institutions, large companies, only account for about 1% of all the rental housing in the United States and only about 2% of the single-family rental housing.
There's a small but mighty group of companies that lead the industry.
So Pretium is the parent company for a company called Progress Residential that owns about 90,000 homes. They were started by Don Mullen, who came out of Goldman Sachs' mortgage group. Invitation
Own 90,000 homes. Are you hearing what I'm saying to you? They own 90,000 homes.
Homes was started by Blackstone, but Blackstone sold their position a long time ago. They own about 80,000 homes. American Homes for Rent, which was started by Wayne Hughes, they own about 60,000 homes. There's a company called Tricon Residential that's out of Canada. And then there's one called Amherst. Those are the big five.
In recent years, corporate landlords have been most active in the Sun Belt. In 2021, corporations bought 28% of all the homes sold in Texas.
And guess where all of the black people are running to? Guess where when you go and you talk about home envy and you put in all of these hashtags of what's happening on the internet and so on and so forth, guess where the overwhelming majority of the people are going? If you want to go or you want to know where all of the money is being ran up from a corporate entity perspective, the only thing you have to do is look at where black people are migrating. Hear me out. You're not paying attention to what I'm telling you because you're in your emotions right now. Link is pinned to the top of the chat if you want to be able to cam up and come up here and ask me a question or you got a comment or concern. Wherever you see the majority of black people running to, that is where the most money is being extracted from a financial perspective in every industry. Right now, every black person in America is shunning Atlanta and they trying to get down to Houston. They not going down into Austin in order to go and work for Tesla. They not moving over into San Antonio where the majority of the girls is big and they eat them churros. Shout out to Charles Barkley. They not even necessarily trying to migrate over into Dallas. They going to Houston, Texas. Do you know where the majority of the homes are being built and bought up by corporate entities? It's where you're going to put your money, honey. You're so busy looking at the culture from black people and whether or not the Migos is going to be down there and what Jay Prince is doing down there. and you don't even understand that the majority of the people that's making money, all you got to do is follow the money. Follow the corporate entities and where they're dedicating a majority of their resources. They spent the majority of their money buying up the real estate down in Texas. What do you think is happening right now?
That figure was 19% in Georgia and 16% in Florida. Companies like Pradium and Blackstone.
Georgia, Florida, Texas. Georgia, Florida, Texas. Where are the majority of the Californians and the New Yorkers that have a lot of money that sold their homes? Where are they also spending all of their money and renting y'all out of?
Target these markets. Blackstone in particular has held large stakes in several companies that dominate the region. Rent hikes for single-family homes in this region have outpaced other parts of the country. Since the onset of the pandemic, rents for a 2-bed detached home increased about 43% in Phoenix. They're up 44% in Tampa and 35% in Atlanta. That's compared to 24% nationwide. Experts say that many of the properties bought up by institutional groups were previously owned by people who were destabilized in recent recessions.
Are y'all hearing what's being communicated? The majority of the homes were you selling your home that was left to you from your parents. The majority of the homes are people that are destabilized based off a recession. If you go and look at the numbers and you try to understand, okay, who are the majority of the people that are destabilized by the recession? It's middle-class America. It's women, black women specifically, and what y'all like to identify as the people that's operating within the Victim Olympics. People of color. The destabilization happens within your environment, your culture, your neighborhood. And then as these things are bought up, they're sold back to you or they're leased to you. Let me break this down. I'm not going to even deep dive too heavy into this. If y'all want to go over and y'all want to watch this on CNBC, you're more than welcome to. Do your own research, okay? I just wanted to give you a little bit of a taste. We have a lot of these conversations within our environment and we talk about ownership. Own everything. But we're all misguided because our idea of ownership is all based off of starting a business. When you start a business, all you're doing is creating another job for yourself, okay? Hear me out. I'm talking very slow, on purpose, so you can understand what I'm saying. When we talk about ownership, when other people, when other cultures, when corporate America, when Wall Street talks about ownership, they talk about owning assets. Your business is not necessarily an asset. It's just meaningful to you. Your business is not necessarily an asset. It's just meaningful to you. If it's not income generating and if it does not increase and beat the rate of inflation over time, then it's not a growing asset. It's not a revenue generating asset. It's not something that they care about. Do you know why they're buying up all of the catalogs and why they're buying up John Legend and Future and they recently bought Murder Inc. and all of these other. Do you know why they buying the majority of these catalogs? You know who had the game first? Prince and Michael Jackson. As much as they were competing with each other from a creative perspective, they were also more in tune with how it was that they were supposed to be operating from a business perspective. Michael Jackson owned the Beatles catalog. Prince wouldn't even do a song with you unless you owned what it is that you were doing. Ownership is an asset that you can then in the future or currently continue to make revenue off of. Do you know why it's so important for me to make sure that I exclusively and continuously create content, especially with some of the most dynamic people, regardless of whether or not it get a whole lot of views or not? Is because the content catalog, they're now buying up YouTubers and content creators' catalogs in order to be able to leverage that as an asset. Data, information, income generation, revenue, anything that continues to make money or appreciate over time is an asset. Ownership now. Let me give you a comparison, right? For those of you in the back that really don't understand what I'm saying, because I'm going to break it down from a C student's perspective. Ownership does not mean just owning everything that you buy. You got finessed. When they told you you're not balling unless you own your car, they lied to you because you don't even know how to properly depreciate. If y'all are not a part of the Patreon, link is in the description as well as pinned to the top of the chat. You'll be able to ask Pocket Watching with JT coming on the platform on an upcoming webinar. Anything that you want to ask them about how it is that you need to be leveraging assets, your business, how you need to be setting up everything, so on and so forth, right? You bought the car, but the car is depreciating. You did buy it in your regular name and you didn't even put it in your business name. It didn't even meet the threshold for the weight requirement for you to be able to write it off from a business perspective. You could have leased it in your business name and wrote off the entirety of the payment, the insurance, and all of the maintenance that goes along with it, including your mileage. Because you don't understand how money works, you let these rappers and all of these people that are supposed to be cultural icons sell you on a depreciating asset. That means that the minute that you drive it off the lot is worth less than what you paid for it. Meanwhile, institutional investors, if you actually want to know how you're supposed to move in your personal life, institutional investors are paying and buying out entire neighborhoods and cul-de-sacs. I told y'all that I paid off, again, and I'm going to say it again because I show the receipts, $163,000 on the final mortgage that I own for my business. The day after I paid it off, I got a rent payment from that same property for $2,500. That means that property specifically, even if I don't take depreciation, tap into the Patreon, is going to be netting me at least $30,000 a year in profit. Some of y'all don't even make $30,000 a year. That property, with no putting that money back into the mortgage and servicing the loan, will generate, that property alone, let alone all of the rest of the properties, are going to be generating at least $30,000 per property. Cars depreciate when you drive them off the lot. This is worth more than what I paid for it, and I get to wear it and enjoy it. I need you to understand how money works. I need you to follow the money. I need you to follow exactly what's going on so you can better understand how you can leverage what's going on in the system in order to make more informed decisions on how it is that you can make more money yourself personally. Don't hate them. Don't hate the people that's doing well. I remember when Donald Trump, and it came out that he only pays $700 in income taxes, and everybody was mad at him. The first thing I wanted to know is how did he do it so that I can try to implement it myself legally.